I'll now recognize the ranking member, the gentlelady from California, Ms. Waters.
Thank you very much, Mr. Chairman. But I'd like to again thank Director Chopra for the fantastic job that you're doing and the leadership that you're providing and the way the consumers now have a real voice with your leadership. And I want to talk about one more issue that I think is so important to all of the people of this country, and that's what you're moving to do on medical debt. I understand that you have moved to get started with a rule on medical debt. Will you explain to us what you're doing?
Yes. So under the Fair Credit Reporting Act, Congress put into place a prohibition when it comes to medical information. But there has been a tweak in the rule from many years ago that has really allowed, in many cases, unverified medical bills to be permeating people's credit reports. And what we've seen, Congresswoman Waters, is that the accuracy issues are so serious on those medical bills, and we have a situation where people are facing a total surprise that something is on their credit report. They cannot rapidly fix it, and it really can jeopardize their ability to get that loan or to pass a background check. So we have looked at this issue for years. There's not even much predictive power of these medical bills. We haven't proposed getting rid of medical credit cards or other medical loans, just these bills that are often stuck in an insurance company doom loop. And we're going to be looking for feedback on this, but I think this will be a positive step in direct line with what Congress wanted of prohibiting this medical information on credit reports.
Let me just go back to another concern that I have, and this is about late fees and junk fees. Well, I can tell you how concerned I am about it. Why don't you just tell us exactly what you're doing about junk fees?
Well, there is an all-of-government effort to combat this creep of fees that has really permeated throughout the economy. This isn't something that's really a negotiated price. It's often not upfront. So we've taken a series of steps to make sure that existing congressional prohibitions, like in credit cards and in truth in lending, are being adhered to. At the end of the day, we think markets work best when people can see the prices up front, compare it, and people offering the best service and price can win out. The more we shift this up front, the better. I know there's been legislation passed by the House when it comes to things like hotels and tickets. We do need to do more to make our markets work free of these junk fees.
Thank you very much. You have made it a priority also to hold large financial institutions accountable for their repeated violations of the law. In a speech you said, and I quote, "Corporate recidivism has become normalized and calculated as the cost of doing business," and I can't agree with you more. I appreciate the approach you decided to take to rein in repeated behavior by non-bank firms that callously violate the law and harm consumers. Can you again further help us out by discussing the rule you issued to implement a public registry for non-bank repeated offenders and how it will help CFPB rein in bad practices in the marketplace?
It's a huge problem that when a small business or small company gets in trouble, they face being totally wiped out. But for the same exact conduct, a very large player really can just pay a fine and move on. There has to be some equal justice. When you have the same misconduct, there should be a similar sanction. You cannot have a situation where small businesses just get the hammer and everyone else is sort of getting a light touch. We have put into place a rule that will allow law enforcement to coordinate and stop repeat offenses before they go on. We have seen scammers set up shop in one state, get caught, move to another state. I think this is a needed effort to make sure we do end this practice of constant rinse, repeat offenses.
Thank you so much. Of course, we've seen banks like Wells Fargo repeatedly break the law. And then with regional bank failures last year, we saw how repeated supervisory warnings were ignored by Silicon Valley Bank and more and more and more. Thank you for your work.
We'll now recognize the gentleman from Kentucky, Mr. Barr, for 5 minutes.
Director, I'm looking at a survey right now. 7 out of 10